Good morning, traders. It is 8:01 a.m. Chicago time on the 17th of June 2015. It's a Wednesday, hump day. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. As always, a quick rundown of what's likely to be driving the market today, what has driven the market so far. UK wage data brings in forward expectations of the first Bank of England rate hike. The data on wages was very, very strong today. The British US pair hit a 1-month high at $1.5720. A BOE 25 basis point hike now priced in for June 2016. According to SONIA. Greece's central bank governor Stournaras stated that a failure to reach an agreement with creditors would mark the beginning of a painful period with potential default and Grexit. The Swiss franc seeing safe haven flows as more and more chatter hits the wire regarding little room to compromise on Grexit, uncertainty on FOMC and SNB policy meeting tomorrow. So that's what's really driving things overnight. Comments from various characters, including Juncker and so on, is saying that, for example, the German finance minister Schäuble said to cite German contingency preparations for no agreement between Greece and creditors by June 30th. Hopes an agreement can be reached. Essentially, it sounds like pretty much everybody's starting to become resigned to the idea that Greece is the chance for Greece to exit the eurozone is increasing over time. That's causing, despite the rally into the close yesterday in the U.S. markets, that's causing the European markets to basically be trading sideways today. Other than that, not seeing much on the tape of consequence. Looking at what's in store for today, we have the crude oil inventories, U.S. crude oil inventories at 9:30 Central today, expecting negative 1.75 million barrels. Cushing crude inventories negative 700,000. Gasoline inventories negative 150,000, and distillate inventories plus 950,000, and U.S. refinery utilization at 0.5%. That pretty much clears the deck for the FOMC rate decision today, which is expected at 1 o'clock Central, 2 Eastern, 7 p.m. British Standard Time. We're looking for 0.25%. To stay steady, and what's important are the comments by Fed's Yellen. I read a piece by Goldman Sachs saying that the way today's conference call goes, or a press meeting goes, and the discussion of how the data is being interpreted is very, very important for what happens with the Fed funds rate futures going forward and how things get priced in. The expectation is that the Fed will let us know that the economy is not as strong as they'd like, but this analyst from Goldman Sachs believes that there's little chance of an increase before December of this year. So, and I've discussed it in the past that I believe they have very little room to increase rates still. As far as speakers, we're looking at 9 o'clock Central. Treasury Secretary Lew testifies in his annual report to the Financial Oversight Council. And then Fed's Yellen again at 1:30, holding her press conference. And then also IMF's Managing Director Lagarde speaks at a conference in Brussels regarding various topics. Let's switch gears here and look at the technical picture. So yesterday The expectation was for the market to essentially battle this 71 quarter area and stay in line. The primary hypo, given how we left off on Monday, the primary hypo was for it to test up into the 75-75 area and then basically get stuck in the range yesterday. It did not do that at all. Hypo 1 did not work out. The second idea was for it to push through and close this gap and this point of control eventually, and that's what it did. But I didn't talk about that much, but that was the opposite hypo is usually hypo 2. Let me turn down my news feed. A very orderly auction in the morning until a higher time frame stepped in. I want to remind you, it is quad witching Friday this Friday. This is expiration week, so you're gonna get this sort of movement. Yesterday's auction, despite the push, looked a lot like an open auction in range. It tested down to the LVN and the prior day's initial balance high. But then we saw a driver here, a 10-point rotation, pretty decent delta on that rotation up. So the classification became clear that it was an open test drive, which means that there's a driving motion in here. And then what ensued is it pushed back into the opening swing here, which canceled that out. Essentially, what the market did is it pushed right into the gap zone close, which is the bottom of Friday's range, and then it rotated all the way back through. So once it did that, it took the trend day possibility down quite a few notches, and it became more of a balanced trade. And that's what I was looking for. Later in the session, it pushed through that high, the IB high, and back into the range of Friday, which puts the 85 quarter on deck. The one thing I want to leave you with here, I did comment on Twitter that we should create a statue of this profile and put a tag on it. And call it here one slide this was once a compressed week high as a monument to what a compressed week high or poor high looks like. This is as great an example as they come, and I said monument because I don't expect it to stay, something to memorialize it, as it's not likely. The probabilities are against this holding, although a lot of people look at this as a multiple top showing a lot of resistance. But the way the auction works is that if we don't move away from a high immediately, then it's not an excess, it's not considered an excess, and it's likely to be taken out. And it definitely was overnight. That played out as expected. So here we go on the overnight. As soon as the market reopened for the 45-minute session after the pit, it immediately took out that high, pushed to 90.75, and then during the European session, pushed to the overnight high of 96.50, and the market has since pulled back. We have a very Gaussian or normal distribution profile on the overnight session, so showing consensus on price at 2092.50 or so. And it's a fairly balanced trade. We're trading underneath the mid of the session underneath the point of control with 20 minutes to go on the open. This looks like the inventory has already balanced out. The overnight inventory is already balanced out, has already had its balance test, and so that leaves us with a pretty murky open. In addition to the fact that the overnight didn't really go anywhere, and we do have this overnight point of control right at yesterday's high, and right in the middle of this high volume zone. I want to show you this more clearly. If we only took the what has happened since the last few sessions or last week or so, this profile here shows us that there's quite a bit of consensus here, quite a bit of trading that's occurring here, and we've moved from the lower distribution the other day. We've spent a lot of time in the middle of distribution, and we're trying to push into the upper distribution. So if I extend this out to what it looked like from the high, to look at what this whole swing looks like in profile, you can see that we're right up against the most traded area, or the highest volume area. I think there's a fair amount of overhead resistance going in into today's session. So the expectation, the primary hypothesis and expectation, is for a fairly choppy open. We still have quad witching Friday, as I said. We still have people that have to hedge their option deltas and keep their option positions neutral and so forth going into expiration. So you're likely to see some pretty wide rotations here and there that seem random. But again, we're trading futures here, and futures are a hedging product. And so they're doing their job, and they do their job the most, and that's why volume is much higher usually on expiration week. People are going to position themselves to be neutral on their other positions that they're holding and hedging against. So today's primary hypothesis, I'm looking for it to be stuck here. I'm looking for a test of yesterday's high and point of control. There was a lot that traded in yesterday's upper value area here in point of control. Volume overall yesterday was pretty low, 849,000 on the day session versus 1 million. Little over 1 million expected as common. But overall, I think we have this FOMC issue ahead of us, and we're likely to just chop around until that happens. The support, the primary support underneath this is not until approximately 82.50 or so. This the bottom of this neckline. And singles on the market profile. So if it does slip through this this point of control at 88, it's very much likely to move down this flagpole all the way down, back down to this 82.25 that we tested early yesterday, and is the LVN for the session, and that's what I'd be looking for. If it does fall through, I'd be looking to target that 82.75, 83 area for a trade. Otherwise, I'm looking for it to be choppy right here, and an upper target's 93 or so, 93.75 or so. I'm looking for the overnight low to be taken out more so than the overnight high on the overnight stat. But if we do get a drive, let's say we open, it chops around for a little bit, and we get an immediate drive, then I don't mind being wrong. It creates better opportunity in that situation. I'm looking for 2101.50 as a target, which is only about 8 points away, 9 points away, so it's well within range. But I expect that most of today, I expect some flutter in the morning, some trading in the first half hour to an hour. There aren't any other numbers that are likely to cause the market to revalue the S&P 500, but then we will settle down into a chop zone and then into the FOMC trade. So be sure that you're clear about your positions by 1 o'clock Central today, 2 Eastern, as that's a major release. A quick scan of the other markets. One of the things I want to look at is the weekly profile, just to see where we are. And as you can see here, on Monday we took out last week's low by 1 tick. We had an excess low and a failed auction, very classic. So we took out that last week's low by 1 tick and came climbing up. And as you can see here, each bracket is represented by a different color. So Monday's gold, Tuesday's this purple color, and you can see that each bracket is one time framing up, and we're pushing up, and that's where we're headed here. We did push here overnight, but the main target on the profile, the main immediate target is 95 here. You could see it much more clearly on the weekly profiles than in the volume profile. This is where the market profile is a little more useful. The bigger picture stuff, market profile shows us the patterns a little bit more clearly. But overall, this is a one-time framing up market. I expect us to be stuck in this upper end this morning, but my overall bias going into today's FOMC is for us to push through to this 2095, and again 2101.50 being the key target above. Any failure below, again, targets the 83, and failure below that pushes us back to that key monthly figure at 75.50 or so, puts us in this high volume node. So we're either, right now the ES is trading 2092 right up here, right in this gap zone. I expect a rotation down. I expect it to get tangled up in this area. If it finds support, then I'm looking for it to rotate back up into 95 or so, and then 2101.50. If not, then I'm looking for it to drop through, push to 83, and then ultimately push to 75.50 with the FOMC coming out. Does that make sense? I hope it does. But that's basically the outline for how things look today. I'll leave you with those thoughts. I'm over my time. Thanks for joining, and I'll catch you tomorrow. Take care.